So Michael is our democratization guru because he wrote about it from the politics and economic side, but also from the investment side, right? And he said correctly, democratizing means lowering the barrier, right? Getting more people in that were previously excluded, and by that possibly boosting the ecosystem. It's kind of like Mike said, we don't want just the public drink, we want the private beer and wine. While I see already all our speakers coming in, please, they're very, proactive already. I will give you their names so that you know who is sitting now behind me. Maybe I'll come up here because otherwise you don't see them really well. So Michael, you know already. Other one is Alexander Schmidt, who is on that side. He's Chief Product Strategist at Erste Private Banking. Interesting because as a bank, they also want to get more private investors in. So big applause for him. Then we have Michaela Sulke-Tresek from Trifolium Partners. She's founding partner there, and they are really a multifamily office and wealth advisory company. Big applause. Next one, Birgit Schmollmüller, CEO of the Austrian affiliate of Munich Private Equity, RWB. And it's interesting because they also want to get new private investors in, so we will be interested on how they're really doing that. Big applause. Last but not least, GBG Private Markets Managing Director. That's a subsidiary of Shellhammer, and they are also the sponsor. So big applause, and the floor is yours, I would say.
Thank you very much. You're all very, very welcome. Alex and Bernadette, I'm just going to give each of you a question to help set the scene. So this morning in Wall Street, all the big private equity managers will be kind of rubbing their hands, very optimistic. Europe, the industry is not as big. Do you want to just help give us a sense of the context as where is private equity in Europe in terms of how active it is in the economy, the role in the economy, and then maybe where's there room for development? Maybe you start with Bernadette.
Yes, a very warm welcome from my side. What we are seeing, we have been investing in the private equity markets for 20 years, and we have seen the development. In Europe, it has been developing very well. You see much more qualitative companies we can acquire. We see a higher number of companies which are offered by the companies and the fund managers. However, there are regional differences in Europe in terms of quality, in terms of access to companies, and also our customers are not willing to invest in each region in Austria, in Europe. So that we could see in the past what's going on and what's happened. I assume it would develop more and more. Two examples one example is the good sign of the European Union regarding LTIF 2.0 regulation. It will help to get access for retail customers to the private asset industry. And the second one was last year from the UK government, who also supports the private equity industry with a reform because there's an agreed objective that the largest pension funds and insurance company, for example, have to invest at least 5% in the private equity universe by 2030. So it will bring an additional amount in the private equity industry of 50 billion from the UK side. So on over, we think it will expand. So the amount of AUMs will expand in Europe and should be more quality. So I hope that each private equity provider will lead on the quality and not on the quantity. So.
Yeah, I fully agree. Unfortunately, I think when it comes to Europe, you have to be more specific about the countries because I think the level is probably different, especially when it comes to wealth. One anecdote about that, I talked to a very big private equity manager last week from the States, and they told me they sold billions of their new wealth private equity fund. And I asked him, billions, really, where? And he's like, but most of it was US, yeah. So, but 1 billion was the European vehicle. And I was like, 1 billion in wealth in Europe, where? In which country did you sell 1 billion? He's like, it's also Asia money, you know? And, and then I was like, so much, how much did you actually sell? And then the number was actually way below the 5 to 6 billions they first mentioned. So I think we are like 10, 15 years behind the US when it comes to the wealth part maybe, but as Bernadette mentions, we definitely are eager to start, and we recognize the importance more and more. And so I think we are in a good way, but we're still early, at least in wealth. Yeah.
And that's a good point. That leads us on, I guess, to sort of the plumbing and the piping of the industry. It's not as well developed in Europe, and you know, even if I'm a high, ultra high net worth investor, it's not clear to me as to where I should go to get the best private equity and venture funds. So I'm going to start, Mihaela, with you. What needs to be done, and what would you like to see more of in terms of platforms and products to allow, again, inverted commas, kind of ordinary people access good private equity and venture?
Yeah, I think I would first come back to your point about education. I think the main problem, especially in Austria, if you talk about the UK or Asia or whatever, if you talk about Austria, if you look at the way the Austrians invest their money, it's mostly the good old Sparbuch. It's about 15% allocated to that. Then if you're lucky, you have people who invest in listed equity, which is about 12%, I think, right now. When I started in the industry, it was about 4%. So we have developed quite a bit in that direction. But private equity, in a way, is far out in terms of what is it and how can I get access to that. So I think the first bit is education. The education should start, in my opinion, with the young people. Yeah, and the positive development I see there is that the young people are eager to learn about that, yeah, because they read a lot about that, they read about startups, and I feel there is a lot of positive development going on with the young people there. It's almost like an industrial revolution. Everybody wants to be part of that, yeah. So education is the first thing. The second thing is the political awareness. Yeah, I feel our politicians still don't understand how capital markets work. So the platforms or the products we need is, as we discuss, access to smaller sized private equity solutions for investors. There's quite a demand for that. The big wealthy people know how to get to it because they have a lot of advisors surrounding them and recommending stuff. But even there is a lot of difference in terms of transparency, in terms of regular reporting. So I think there should be products which we see right now, even from the banks in the offering, for people to enter the market with very low denominations.
Yeah, and actually, I'll let the others respond to that in a second.
Yeah.
Just the reason Moonfair exists is that about, I think, 6-7 years ago, Stefan Pauls, who was the founder of the company, worked in one of the really big PE funds. And when he left, he wanted to invest money with them, and he said, you know, can I give you a little bit of my savings? And they said, sure, yeah, but the minimum ticket is 10 million.
Yeah, exactly.
And he said, I only got 100,000. So he actually went off and set up a kind of a SPV, friends and family vehicle, and then realized that you know, there was nothing out there to help access smaller tickets, and that's where Moonfair was born. But let's get the others in to contribute in this. Yeah.
Yes, thank you. I totally agree with you. But as far as financial education is concerned, our group comes really from the private investor side. For 25 years, we have been launching private equity fund of funds for private investors, small investors, which means that you can buy a ticket for 5,000 euros, or you can even pay monthly rates. So we've got a lot of experience with private investors. And we really appreciate the current development that, with LTIF 2.0, yeah, that's what it's called. Other product offerings are coming to the market, yeah, new providers, and things are changing, and it's looking really good now, because for like 25 years we've been more or less alone on the market, trying to convince private investors to get into the asset class, private equity. And I can tell you, it's really hard, yeah. I mean, as you said, financial education is really at a low level. The asset class is not well known. And if you're the only product provider at the market to launch really product offerings for small sums, it's quite difficult. So really looking forward to seeing other fund of fund managers proposing their stable product to the Austrian market. And I think combined forces and stronger marketing will increase awareness of private equity and will increase the PE share in private investor portfolios. Yeah? So I think we all have the same objective. We can work together and make this interesting, stable and well-performing asset class better known, and find the access to the private investor.
Yeah.
Yeah, I completely agree regarding the financial education. It should really start at the beginning of school with the primary schools. But what I'm really missing in Austria as well is a legal fund structure like the same in Luxembourg. With our 20 years of experience, we see a high trust in Austrian structures from our customers instead of foreign structures. So if you really have an Austrian legal fund structure and it's not at the moment it does not exist, then it would also help us in offering private equity.
And that's a question of political leadership initiative as well.
Yes.
Yeah. Okay.
Maybe to add to the financial education, which we at Erste Bank do a lot, and we talk about it a lot and how important it is. And we walk around now for 15 years trying to convince people to get into liquid equity. And then you look at the States and Asia, and I cannot imagine that they have the better education. I think it's also a cultural thing. Like in Europe, our grandparents, they lost everything, right, in the war. So there's a different culture and fear when it comes to money and losing. And I think this is also what the young generation doesn't have anymore, and which is very important, to have just more optimism for the future and just to be more, take more risks when it comes to investing, because you don't carry that. Yeah? And I think this is another big reason that we need to be more optimistic in Europe generally when we talk about topics like investing.
Totally agree. Can I just pivot a bit on the young people thing? A lot of it seems to me investing apps for young people are gamified. They're more trading, speculative. Do you think that needs to change towards just educating people to invest long term?
I think it's okay if you invest, like if you're young and you invest by 3,000 euros in Tesla, that's okay. When you inherit 500,000 euros, $1 million, you probably still want to talk again to someone. But still, it's the technology, of course, is very important to open up people, to show them, to get them used to investing in general. Yeah.
I agree. The gaming part can also be seen with the enthusiasm of young people for Bitcoin. There you see the quick development, the quick win. And I know young people who earned their flat by buying Bitcoin at the right time and selling it at the right time. So I think this is at the moment the third thing which introduces young people to the capital markets. I think private equity is definitely a longer term play, but I agree they will move from there into something if they acquire a bigger wealth into private equity, because they have the interest. And I see many young people being interested even in indirect investments of startups. They even take that risk and say, I like the idea, I like to get involved, I like to put some money in there.
That's actually true. And I mean, again, in France, there's a huge startup culture. And my own experience is that young people They're very curious about the future and technologies. And actually, Elon Musk, for good or bad, he has actually captured a lot of people's minds with things like SpaceX. And there's obviously another Austrian entrepreneur who's very active in the States as well in that sphere. And when I'm trying to entice people to invest in venture capital, I'm more of a venture investor myself. I outline some of the outrageous and really cool technologies that I'm seeing. So I'm working with a company that's commercializing the power source of the Mars probe, and people should be able to access this in kind of a very controlled way. So I'm just, from your own experience, maybe Brigitte, we'll start with you. What's the kind of the coolest technology you've seen that's investable or that you've invested in?
The coolest one, well, as we're a fund manager, we have hundreds of investment examples, of course, but maybe I'm gonna pick two from our Austrian portfolio because it might be more interesting to have local stories. One company we visited last year is based in Upper Austria, and it's called Agilox. Maybe some of you know about it. And actually they develop and produce artificially intelligent forklifts, Gabelstapler in German.
Okay.
Yeah. And actually these devices have a swarm technology, which means that they can communicate and interact with each other independently. And it takes quite a lot of hours to set up the first device, but just a few minutes for all the subsequent ones. So you have a whole team of robots, if you want, to work together, and it's really fascinating to see that. And actually one of the most renowned tech buyout funds became aware of this company here in Austria, and they proposed a partnership, and they accepted. And in 2021, they started working together, and they conquered the US market together. They have I think they're market leader now in the US, and in 2 or 3 years. And it's not that there is no competitors in this field, but this swarm technology makes this product solution absolutely unique. So they really have the potential for worldwide leadership. And as we don't have much industry in Austria, it's really a special case, I feel. And they increased the number of employees here in Austria. They expanded their sites. So it was not the case that they moved all the production to the US, but it really stayed here in Austria, which is a good thing. And I hope that it's gonna stay like this. And I would say that without this expertise and network of the private equity fund, they would have never been able to expand that quickly and successfully.
Okay, that's a cool example. I like that. Yeah. Anyone else?
We mainly focus on the buyout segment and the secondary market, and we invest via funds. We like these segments because if you do steady investments, you really get the steady double-digit returns. If you do consistent investments, in my point of view, the most sexy one from the telling side is on the venture side, but you also can gain really good returns on the buyout side. And what is the example? In the last year, I looked through the deals in the last years, and the deals with the highest exit multiples were in the software area. So software is really an important segment in the industry. One company was a UK company, so it's the second largest market. It was a UK company. It's a software company which offers compliance software for dentists. It's a highly fragmented market in the UK. The fund manager consolidated this highly fragmented market, sold the company to another private equity fund for 9x money multiples. It's really high multiple from the buyout side. So that's it's not sexy, it's not a sexy story, but you get really high returns. So the software area is really important. And also sports, as always here, private equity and sports get more and more important. We invested in a US company who produced sports helmets. It was a pretty well exit with 15 exit multiple, so you get 15 times your money back. So it's on the buyout area. So you can really do good exits with good stories, and if you find a good buyer.
They're great examples because they show, so private equity, my experience with private equity is that it is active in really sometimes very strange and boring segments of the economy, you know, and you couldn't get more strange and boring than compliance for dentists.
Yes.
But if you understand the industry structure and you can bring about changes and consolidation in that structure, then the second thing, which is a very, very high returns, become true. And I'm personally very convinced that one of the reasons we have to democratize access to good private equity and good venture is the return profile. So, you know, historically, if I go back 100 years, Austrian equities have returned 4% real return every year. I think it's over the last 120 years. Then when you talk about sort of 9 and 15 times return on your money and over a small period of time, and obviously there's, you know, different risk and there's liquidity risk. It is still quite mind-boggling. And if you think of, you know, if I'm even for my pension fund to have 10 or 15% in a fund like that could actually make a meaningful difference over time. So again, that's you know, there's a real wealth effect and a real economic effect. And Michal, I'm going to ask you to pick this up because, you know, part of the rationale is that by bringing in financing in from private equity and venture, we increase the growth and we increase the ability of small open economies to innovate, right?
Mm-hmm. We definitely do, but I want to come back to my skepticism about Austria and the attitude in investing. Yeah? I think the Austrians are people who want to have security. And if you only have 12% of the population or investors even buying listed equity and think listed equity is very dangerous, how can you persuade them to go into private equity? Yeah. So I think what we need to achieve, and this is something you referred to in your keynote speech, is this public-private partnership kind of model, where the investor, the small investor, how small the investor even is, gets the comfort, let's call it comfort, that there is some security behind his investment and that he's not going to lose the money. Yeah, I think the big fear here is they see the opportunity, but the conservative investors, they want to know that they are not losing all of their money. Yeah, they are prepared that there are some kind of negative experiences in investing, but they don't want to lose all of their money. And that's something which I think the regulators or the government or the industry has to think about. Yeah, there are always good examples who work, 15 times exit, whatever, but there are other examples where it doesn't work, and people always read about those and remember those instead of looking into the upside.
Yeah, yeah, and it's more urgent than with, you know, demographic changes, etc. But maybe ask for those of you who want just to share your own experiences, kind of talking to clients and talking through some of these issues with, you know, portfolio construction, etc. Birgit, yeah.
Yeah. Younger people are interested in crowdfunding platforms and so on, and it's like you said, it's a good way to start the topic, to start investing. I'm pretty sure that from time to time they will be disappointed, of course, you know, but because the risk profile is quite high, but it's still they are interested to get into it, so it's a good thing. But then we have to get them going, to move them to more structured products and secure vehicles, and that is not that easy, of course. Yeah, that's what you were talking about. I mean, talking about private equity products. Normally, we have closed-end structures, so you can't really compare them to the public market because they're illiquid, of course. And you have quite a long fund term where you have no access to your money. This has a good thing. This has disadvantages, of course. And the most difficult thing talking about private investors is to keep them for 10 or 15 years in an investment where they don't really have access to the money, of course. Yeah? And the good thing is that when you don't have access, you have to wait. and you come to the end. You know, we have a lot of investors calling, I need to buy a new car, I need 5,000 euro. No, you can't, you know. Don't touch this money, go to the end, and you'll get a good result. And this is the good thing, because anyways, a good financial advisor will never advise to invest a large percentage in an illiquid asset class, but only a smaller percentage that goes with the person. And this is really important to come to the end and to get the result you deserve. You know? And I think these closed-end structures are they're often criticized, of course, you know, because even for policymakers, it's high risk because you don't have access to your money. But actually, if it's broadly diversified, you can even protect the private investor from himself.
Exactly.
Yeah. Recently, we had an asset allocation of a wealthy heir. Yeah, they had enough money, and we put 15% very consciously into private equity. Just to make sure, because they said the main goal is to get X amount per year as return from their wealth. And private equity is dearly needed to increase that return. It's not going to happen the next 5 years. We explained that to the customer, but it's going to boost the return in 7 years' time, and then constantly onwards from there. It's well diversified, but it's locked up. And as you said, it protects them from themselves withdrawing the money because they know they can't access it. Yeah. But this is a big, wealthy family. Yeah, they have enough wealth to allocate to private equity. I think the more important point is to get the tiny bit and do the same thing with the people who are not as wealthy as that person, because it's going to do the same to their wealth going forward.
What I'd like to add on this moment is what my main concern is. Private equity, it's an illiquid asset class with all the advantages and disadvantages it will remain. And what we see is the liquidity solutions, the semi-liquid products. We're really concerned about this because it's an illiquid asset class, and you really get good returns if you stay with your companies until they are bring up to the next stage. So that's the goal in the private equity. You buy a company and bring the company to the next stage. So now there are more and more semi-liquid products for retail customers. So you provide them liquidity in an illiquid asset class, which could be, in my point of view, risky for the asset class.
Like we started, for example, with our first fund this January, Partners Group, closed-ended capital call structure. And we have a fully automated system. We developed it for 1.5 years, invested 1 million, fully automated. But what I can tell you is you won't be able to scale that into retail because it's simply not doable with the capital calls for those kind of people. And when you look at the United States, if you look at how they scale wealth, it's evergreen. And in my opinion, after our things that we've learned, if you want to bring it down to the people, it should be in some kind of DPM solution as a part where it's managed, and then they can access it. I think talking about single funds like that, we will never be able to scale it broadly. So this is why I think evergreen solutions in the end will be very important to really get everyone involved in the topic. Because now we're doing it in private banking, and we see it's just manageable for certain kind of wealth, but definitely not bringing it down.
But with evergreen structures, you will have a return topic because we will see it in 5 to 10 years. But in my point of view, you could not return the same returns.
The truth is that retail investors always get less returns, unfortunately, than institutional investors. And if you want convenience, it costs money. And I think it still can be a higher performing asset class for them, but of course, there's no question about it that the returns won't be the same. But it's already the same.
And that is a big concern because the dispersion in fund performance in private assets is really big. So being able to choose and get access to the best ones puts a real premium on that. And I think one of the reasons why private equity is very big in the States, as you've had the example of the endowment models. So Yale, Harvard, Princeton invest. I mean, Princeton's, they've got about 40% of their endowment in private assets. And because of their alumni, they've had access to the best funds. So they've done incredibly well over the last about 30 or 40 years. And they still have the obligation to pay out 3% per year to the university institution. But they've kind of been a role model. And I guess we need role models like that in Austria and Ireland as well. One question maybe is I'm quite ignorant on the Austrian pension system, but do any of you see the possibility that the authorities open up pensions to private assets? Or
I think we need to be very clear. For example, if you look at Germany, in the 1960s, 4% of the GDP was funded, growth funding, 4% of the GDP by the banks. In 2000, it was 0%.
Yeah.
We as banks are not able to fund innovation and growth anymore because we cannot securitize AI, we cannot securitize platforms. So the growth funding problem in Europe is huge, and it can only be done by capital markets.
Yeah.
But we need to be absolutely certain wealth will not do it. It doesn't do it in the United States. It's the pension funds, it's the endowments, it's the ultra-high net worth individuals. And for us as Europe to go further and to come back to where we should be, it's absolutely vital. It's not even a question that we open up pension money, institutional money, banks, insurances, to get money into innovation and growth and venture. For me, it's not a question. It's a
necessity.
It's a must-have. Yes.
Yeah.
Well, let's explore that a bit. So in terms of so my next question was going to be about kind of the EU and the local government. What can they do more of, as you said to me earlier, what can they do less of in terms of trying to operationalize that and getting European money into, because we all know that the Draghi report, there's Enrico Letta, who's a former Italian prime minister, who's a colleague of Draghi on this report, and he's proposing capital markets reform, but it's not happening. So maybe we just go around the panel and just, if we think of what would be the practical measures that can either pull back regulation or make it easier to finance innovation.
Good question. Get the EU to do fewer regulations. Good luck. But I think it's. I heard a really nice story recently. I think it's a question of waking up the responsible people in politics, and not just the politicians, but also the lobbyists and whatever you have. There was this story about somebody asked the Swedish finance minister, how did you get people to invest in pension money, and how did you reform your pension system? You are such a socialist country, and you have the third pillar, which has 20 years ago invested into capital markets products. So how did you do that? And he said it was very easy. We went to the United States, we held a roadshow, and the pension funds and the insurance companies in the US told us we're not going to buy any Swedish government bonds anymore. And they said, why? And they said, because your pension system is bankrupt. So go home and fix it, and then we buy Swedish government bonds again. And I think this is going to happen to European countries as well, especially to Austria. So if the politician realizes that there is no money, no funding anymore via government bonds, and I have to really address that problem, I think it's going to help. So I think we have to start. The EU is one thing, and I think with the LTIF they've done a good job. Yeah, they have gone as far as they have gone. But I think it's in Europe, unfortunately, it's a local issue in every country, and that makes it so weak. We talk about Canada, we talk about the US. It's a big capital markets, yeah. But we are 26 capital markets, if you can call them that. Yeah? Yeah. So I think we have to start with if you get the pension system up and running, and if they invest a part of the allocation into private equity, you have gone a a big step. And then the whole thing gains trust also with the retail investors. I mean, I have a question to you, is like the Austrian foundations, how much do they invest in private equity right now?
Yeah,
Out of your experience?
Nothing, yeah.
Yeah.
But
So
unfortunately, I'm with you on that.
Yeah.
That like if you look at the history, unfortunately, those kind of problems never went solved like easily. And I was at a conference 2 weeks ago, and there was Andreas Treichel speaking, who is the head of Forum Alpbach, and his solution was that he wanted to be the dictator of the European Union for 3 years. So there you can see someone as informed as him already resides to things like this. So unfortunately, I'm also a little bit.
Yeah. Because there
this.
are a lot of Austrian foundations, and I don't know the number now, but
yeah.
I doubt it's more than 10% they have invested in private equity, and I think
On average,
10% is huge. Yeah. So coming back to the education problem, yeah, all those people running the semi-institutional money, they don't trust private equity, they don't understand what it is, so I think there needs to be more education. And with the generational switch, I think it's going to happen. Yeah, people are going to be more open, they're going to be more risk taking, at least I hope so.
You need more product offerings so that the asset class gets better known, I think, That was the problem for quite a long time. Not talking about institutionals, but high net worth individuals and private investors. So this LTIF that you mentioned before is a good thing, of course, because for the last 10 years, we had a really restrictive law in Austria or anywhere in the European Union called Alternative Investment Fund Manager Directive. And it was implemented okay in most European countries, and in Austria really restrictively. Yeah? A private you can offer your products only to qualified private investors in Austria, which means that they need a proof of liquid assets of 250,000 euro. Imagine, yeah, this is just private banking investors and not the normal private investors we are talking about. So LTIF changes this, and it's a good thing because now you don't need any proof of assets. There are no entry barriers. Normal private investors can invest in LTIF structures, so in private equity, in infrastructure projects, and so on. And for the first time, the European Union wants this money, these funds from private individuals. And as you said before, maybe they really need it, yeah? And because they need it, they made possible LTIF 2.0. But because we're talking about private investors today, it will be a good thing with much more product offerings to address the private investor, so it gets better known. And it's important that these products are stable, that they perform well, and that product providers who come to the market have a longer vision of staying here. Because if these products don't really perform, in 10 years, we won't be any further than now because people will criticize this asset class, which is really, in general, well-performing and stable, but we have to prove it, yeah?
Yeah.
All the product providers have to prove it so that it can continue.
Yeah, I completely agree with our pension fund thoughts. As we saw in the UK, they will support the private equity industry, and not only the UK private equity industry, so they have to invest 5% private equity. It could be UK outside, so to do something for this market.
Yeah.
So it's willing for me because I am also a pension system, as I'm also in a pension system, and I will go I will retire in 25, 30 years. So why should I invest now in bonds? I'd like to have private equity, liquid equity for the next 30 years. So the awareness that if you really save your money for your retirement, it should be, if you're young, in listed or private equity in risk assets because you have 30 years where you can really gain returns. So this awareness should be in the minds of all the investors.
Do any of you think that the the industry globally has a communications problem. I mean, in public markets, there are thousands of economists talking about, you know, the latest move in stock prices. There's about 6 economists I know working in the private assets world, which is ironic because it's much more rooted in the actual economy than in markets. And many of the big private equity funds are quite conservative. So do you think that they need to modernize and tell a better story? And I'm not saying we should have influencers, but be better at telling the story and better at communicating?
Absolutely. I mean, if you look at the private equity industry, it wasn't public, right? It was behind closed doors, more or less. It was in, like, few people were in the whole industry. It was very small. I think to bring the topic up, you absolutely need to do it. Just coming back to the pension funds, we have one of the biggest with my own pension was invested. I met the guy who invests. I asked him, why is the performance so bad? Yeah? He tells me they want to do more, and they are allowed to do 5% private debt.
Okay.
By the regulator, and they wanted to increase it to 15. So they went to the regulator, and then the Green Party, which is now, cut them down to 7.5. What they're now doing, they invest into certificates, which they have a quota, and these certificates invest into the private debt, but it costs more to do it. So there you can see where we are, but I think it's our obligation as an industry to talk to regulators directly and really talk to those people making the decisions to make them understand, because that's one thing that shouldn't at least be any issue when we want to move the topic forward, no?
But I think we have all been doing this for the last decades. And
but then we should maybe do it.
We should continue, of course.
Yeah.
I mean, there is hope, but with all the changing governments and structures, it's
It's hard work.
It's really hard work.
But when you look at the customers, so we are now 20 years in the market, and you see the first 5 years, it took time to convince the customers it's a good asset class, that you need it in your asset allocation. If you really do not need liquidity, so please put it in your asset allocation. And then when they see the first cycle, the first 10 years, they're really happy with the asset class. So I think you have to educate the customers, the retailers. They have to see one cycle, and then I think it will work. And also the politic, the same. They have to see that now more banks and more institutions are coming in the Austrian market, like to invest in the private equity area. So I think it will help and start for the next century for a good private equity universe.
Okay.
Yeah, I agree with you. I mean, you keep these private investors for 10, 15 years, which is quite a long time. And at the beginning, it's difficult. They're not used to products like these, but it's getting better and better. And when they see returns, they take the initiative because they want to reinvest. Yeah, of course, it's an asset class where you need time to see if the returns are good. So you don't get allocations every year.
Yeah.
This is, compared to the stock market, it's completely different. But if you have time and patience, then it works. It works, and investors see that it's a good thing to invest in. Yeah.
And also the interest is definitely there. We had a client event yesterday about private equity. 105 said they would come, 95 showed up. And what I see at those events is completely different to liquid events. We present for 40 minutes, and then we have discussions for 40 minutes.
Yeah.
With interacting. I didn't see that at the liquid events. It's now with my 7th event, big event, and there were always like huge discussions, a lot of interest. So I think the interest is definitely there.
The appetite is there.
The appetite is definitely there. Yeah.
I'm watching the clock, so I think we all share the common goal of having a sort of portfolio of the future for ordinary people, where a chunk of that is in ELTIFs or in private equity funds, dare I say a platform like Moonfair. Give each of you the challenge of saying, well, what would be 1 or 2 practical things that Austria should do in the next 3 years to realize this and also to support innovation in Austria?
Definitely changing the law about how pension funds can invest.
Yeah.
That would be one big thing. and now also make some kind of personal investment opportunities like the Germans now did with a depot where they can invest long-term for the pension. So I think these two would be the main topics, because product-wise with LTIF, I think we will be set. Yeah.
I would say they address the semi-institutional money, because there's a lot of it in Austria. Before we can go down to the smaller investors, which will have an interest too, but I think we need to address the semi-institutional money like the trust funds and foundations.
Yeah, completely
agree.
agree. Yes,
Great.
completely agree.
Okay, well that's good, because we have some real concrete solutions coming out of a very, very rich discussion. So on behalf of all of us, thank you very much to the four of you.
Thank you.